Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of August 19th to August 23rd, 2024. Let's dive into what to expect in the upcoming week. This week ushers in a period of heightened market anticipation as global investors turn their focus to pivotal economic events and data releases. The upcoming Jackson Hole Symposium is set to dominate headlines, with Fed Chair Powell's remarks potentially reshaping expectations for U.S. monetary policy. Meanwhile, in Europe, crucial PMI data could influence the future rate paths of both the ECB and the BOE, as uncertainty lingers. Across the Atlantic, Canadian inflation figures may test the loonie's recent strength, while Japan's CPI could fuel speculation on a potential wage rate hike. As these developments unfold, markets are poised for potential shifts, making this a critical week for global economic sentiment. Investors have tempered their aggressive Fed rate cut bets following the weaker than expected July NFP report, revising their expectations from 1 to 5 BPS to closer to 100 BPS by year-end. Despite this adjustment, the market's anticipation of a 50 BPS cut in upcoming meetings remains overly dovish, particularly as the U.S. economy shows resilience. The upcoming Jackson Hole Economic Symposium, scheduled for August 22nd to 24th, will be a key focus for investors, with Fed Chair Powell and other central bankers providing insights on monetary policy and the economy. While Powell may leave the door open for a September rate cut, expectations for a double rate cut might not be met, potentially pushing Treasury yields and the U.S. dollar higher. Equity traders will also be keen to hear Powell's views on the U.S. economy amid recent market volatility. Investors are closely watching Eurozone, and UK PM is for further clues on future rate cuts. The ECB recently left rates unchanged, but President Lagarde's cautious tone on growth has led markets to nearly fully price in a to 5 BPS cut in September. Down PMI data could solidify these expectations, with the ECB's meeting minutes also under scrutiny for policy direction. In the UK, after the BOE's rate cut on August 1st and mixed economic data, there's about a 30% chance of another reduction in September. This probability could rise if upcoming PMs show significant business activity decline, aligning with the BOE's cautious stance on further cuts. Canadian CPI data, set for release on Tuesday, could challenge the loonie's recent recovery, while the Bank of Canada has already cut rates twice and is expected to continue. Further inflation slowdown could reinforce dovish expectations, potentially weighing on the currency. However, the loonie's current strength is largely driven by rising oil prices amid Middle East tensions and easing recession fears. As a dovish outlook is already priced in, the CPI figures may have limited impact on the currency's trajectory. Japan's nationwide CPI for July, due on Friday, may influence expectations for another wage rate hike this year. If underlying inflation continues to rise, the likelihood of a rate hike could increase, potentially strengthening the yen. However, with Japan's interest rates still much lower than other major economies, the yen is unlikely to see a strong rally, as investors may continue using it as a funding currency amid improving risk sentiment.
This week has been marked by key economic events and data releases that have influenced market expectations and investor sentiment. From the insights at the Jackson Hole Symposium to the critical PMIs in Europe and the inflation data out of Canada and Japan, each development has added complexity to the global economic landscape. As central banks and policymakers weigh these factors, the impact on currencies, equities, and bond markets will be closely monitored. Stay with us as we continue to track these evolving stories and their implications for the global markets in the days ahead. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in